Good day, everyone. The Society of Actuaries is pleased to present this webcast live with SOA leadership, Proposed Changes to the SOA Legal Structure, Part 3. We are very pleased to welcome all of you to this program. My name is Eric, and I will be your host for today's webcast. Please note that today's call is being recorded, and all participant lines will be muted during the broadcast. If you are listening to the program over the phone and you need assistance at any time today, please press *0 and an operator will assist you. Today's presentation will last up to 90 minutes and include a specific question and answer period. However, you can enter a question for us at any time during today's presentation. You may submit a question by typing it into the box in the lower left corner of the window, then be sure to click on the Send button located next to the box. If you are listening to the audio only and do not have access to the chat box, you may also submit questions to SOA@compartners.com. These instructions will be repeated later in the program. In addition, I would like to draw everyone's attention to the links box located to the left of the slide. To view or print the presentation slides, just click once on the handout link and a separate web browser window will open to display the information and allow you to print it. Now, it is my pleasure to introduce Pat Gould, who will introduce today's speakers. Please go ahead, Pat.
Hello, and thank you for joining us today to hear more about the proposed bylaws amendment that would change the legal structure of the Society of Actuaries. I am Pat Gould, the Managing Director of Marketing and Communications for the SOA. I will be moderating the webinar today, and I'm joined by Andy Rollis, President-elect of the Society of Actuaries, and Rich Vase, SOA's General Counsel. On today's webinar, we will be outlining the proposal and what it means in terms of your membership and SOA operations. We will also talk about what specifically fellows will be asked to approve during the upcoming election period. Then we will address as many of your questions as we can during the Q&A session. And you can send questions, as Eric said, at any time during the webinar using the chat function. And with that, I will turn it over to Andy Rollis to talk about the proposal. Andy?
Thank you, Pat. This is Andy speaking now, and I'm just going to give you the very broad outline of what the proposal is, a little bit of background on how it came about. You guys will recall that a year or so ago we've been in serious discussions with the Casualty Actuarial Society about merging the organizations. What we uncovered was that we were organized as tax-exempt organizations under two different parts of the tax code, and this is something we hadn't realized. We didn't really understand at the time. The concept, the implications, really. And we went back and looked at it, and we found out that the SOA, as it's currently organized, the 501c3, is really the outlier amongst the professional associations. And the reason, why we're an outlier, will become clearer. But this proposal addresses that. So, as a 501c3. Our mission, the mission of a 501c3 is to advance the profession through education and research. What we're proposing is to add a new entity which will be qualified under 501c6. Both of these entities under common control, common board of directors. The new entity, 501c6, would become named the Society of Actuaries, the existing organization 501c3 to be called the Society of Actuaries Research Institute. Now, I'm going to turn it over to Rich, and he's going to describe it in more detail. But I think one of the main distinctions is the 501c3. It's not about saying actuaries are great, okay? It's about doing good through actuarial science. If you want to say actuaries are great, it's probably be better to say it under 501c6, okay? And that's what we found. And at this point, we can advance the slide, and I'll turn it over to Rich.
Thanks, Andy. And you really kind of hit it on the head there. And as you can see on this next slide, what we're trying to do is kind of help people understand the background in terms of what these two different tax-exempt categories or statuses are under the Internal Revenue Code. There are many different types of not-for-profit organizations who qualify for exemption from U.S. income tax. And the two that are important and relevant here is the 501c3 classification and the 501c6. A 501c3 is an organization that is intended to be dedicated to providing some form of a public benefit. Many and most charities or philanthropic organizations, foundations, are organized as 501c3s. They are, collecting donations often and the revenues that are intended to support some kind of a public service mission. Religious organizations also fall under the category of a 501c3. And then there are, however, many scientific, educational, and research type organizations that fall under this classification. Not uncommon to find medical societies. Again, those are organizations that, because they devote resources toward the development of a field of study or science through the research and through education, there is a clear public benefit that's being derived from those activities, and that's why they're organized under this classification. And that's essentially the reason the SOA was classified as a 501c3 going all the way back to 1952. And it continues to be an appropriate classification for the SOA because we do, through the education that's provided, both in terms of qualifying education as well as professional development, and through the research activities, we do provide a benefit that advances actuarial science and benefits the public. So this is and always has been an appropriate classification, and a classification that we do share with other types of professional societies. However, as Andy mentioned, the 501c6 classification for tax exemption is an organization that exists to advance the interest of a particular trade or profession. And as he put it, if you're going to say, look, actuaries are great, actuaries are valuable, there should be greater employment opportunities that we're trying to develop for the profession, and advance the interest of individual members through the value of their credentials, those are activities that the IRS usually views as appropriate for a 501c, or what they would call a business league. That's kind of a general catch-all term. And you will find, trade associations and industry associations in many, many areas, of practice and trades that organize as 501c6 because that's their goal. That's what they're trying to do, is to promote the interest of those professions or trades and the members who are members of those societies. The other actuarial societies, like the Casualty Society, the American Academy, the Conference of Consulting Actuaries, those are organized as 501c6 and always have been. And that's an appropriate classification for this type of an association as well. We are actually both. We do activities that are sort of fall under both categories. And it's precisely for that reason, the recognition and sort of the growing emphasis that we have on trying to promote the actuarial profession as a whole and promote the interest of SOA members, that is telling us that we should be adopting a 501c6 status and conducting some of our activities through the 501c6 rather than the 501c3. So kind of that's the background behind this proposal in terms of the things that we've focused on over the course of the last year and why we're promoting this today.
And Andy, if you'd like to talk a bit about how the activities of the Society of Actuaries, current activities, will be organized under the two entities, I think that would be helpful.
Okay, so we'll advance. I mean, basically, the thing to keep in mind is we're not really changing the Society of Actuaries. We're not changing what we do as an organization. We're going to be doing exactly the same things we were doing before. we're just doing it under, you know, two different umbrellas instead of one umbrella. That's why, you know, at the outset, it's very important. We are going to have just one board of directors, and the one board of directors is going to cover the activities of both of these legal organizational structures. You know, let me start on the right because it's kind of a little bit easier to imagine. The research is pure, you know, pure volunteerism. Most of it is conducted by volunteers. In fact, scholarships, support for foundations. You know, you can see these things. This doesn't promote directly the interests of actuaries as professionals. It may enhance the perception of actuaries, but it's a very indirect way of doing it. Okay. Whereas the activities under the 501c6, you know, the education we're providing, you know, the exams, the PD professional development events, all of the seminars, you know, this is around really improving the value of us as actuaries. You know, most of the services we provide, the membership services, the work that the sections normally do, the newsletters, this kind of stuff. And, you know, the thing that I started with, really, the advocacy and promotion of the profession. You know, and you can see all of these activities advance, and you know, it's tax exempt. We do have a flow of monies in and out. We will collect the dues through the Society of Actuaries. It's where all of our members belong. That's where their credentials come from, and you know, it's still tax exempt. Both of these are tax exempt, but you can you imagine why this clarification was needed. 501c6. Let's put it this way: if all we did was sell T-shirts that said actuaries are great, yeah, maybe that's not such a tax exempt thing. But because we're providing education and other services of that nature, that's why the tax exempt status exists. So I think that's probably enough for this slide. So
great, thanks, Andy. Rich is going to talk a little bit about why we're proposing that this change be made now.
Yep, and Andy did reference this a little bit ago. It was in part a result of some of the things we learned during the course of our activities in discussions with the CAS about a combination, and realizing that, you know, as a 501c6, which they are, and a 501c3, which we are, the prospect of combining those two organizations would have required the establishment of a structure very much like what's being proposed, where both types of entities would exist side by side under a common governance structure with different activities and revenue streams allocated between the two. After the discussions ended, you know, we sat back and we said, well, would it make sense to be adopting that kind of a structure anyway? And as we referred to, given the different purposes that those two different tax-exempt classifications exist for, and the types of activities that we do that fall under both, it was an almost sort of a no-brainer to say, you know, it would make sense for us to adopt this kind of a structure anyway, regardless of whether any consolidation merger takes place. So part of it was a result of that thought process that went through in the combination discussions. The other reason for doing it is simply sort of an understanding of the evolution of the SOA. While education and research have always been core to our mission, and we continue to do those and will continue to do those, you know, we realize that, you know, there is an increasing focus on the importance of promoting the value of the profession and the SOA credentials. And as those activities being most appropriate for a 501c6 type of an entity, it simply makes sense from a fiduciary perspective to adopt the form of legal structure, tax-exempt status, that is appropriate for what we do. While we have engaged in both types of activities for many, many years without question. It's not a question of anyone saying we're doing something wrong. It's a question of simply saying, as we continue to evolve as an organization, we should be doing it in the type of structure that is most appropriate. So this is simply a part of our sort of fiduciary management, and the board recognized the importance of doing that. And pretty much my view when we talked about this was, if we were creating an organization like the SOA today, we would probably choose the 501c6 as the principal tax-exempt classification for most of what we do, and that's probably what we would choose. So we're just simply making a choice now to adopt through a change in legal structure what is probably the best form of structure and tax-exempt status that we would want to have today anyway.
Great, thanks, Rich. And Andy's going to talk a little bit about what this will mean to members and how it will or will not change their experience. Andy?
Okay, so bottom line, very little impact. Okay, no impact on the services we provide to our members, no change to the governance, with the exception of what we're asking to be voted on, which is the adoption of the bylaws for the new entity. The board of directors would be, and the president and the president-elect would be elected in the exact same manner that they're elected today. No change in where the volunteer activities will be supervised from. No change in the organizational structure of the SOA, the staff positions, and no change to the membership dues. I got to be careful as a result of this. Any change of membership dues that you see each year is really a result of the budgeting considerations for that year, but this doesn't bring any additional cost or any additional savings. So bottom line is really no impact that can be seen.
Great, thanks. And finally, Rich, what is it very specifically that the fellows are going to be asked to approve during the upcoming election period?
All right. When we create the two entity structure, as we've mentioned, the 501c6, the newly created entity, is going to be essentially the membership home. That's where the bylaws under which we currently operate will exist, defining member rights, admissions requirements, member disciplinary processes, the governance, the election processes. All of those are defined in the bylaws, and those would be the bylaws that we have for the 501c6 entity. The 501c3 entity will operate as what we call a controlled affiliate. And essentially what that means is it's going to have a set of bylaws that don't have all of those membership provisions in it. It's not going to be a membership body in its own right. It instead is going to be an entity whose board mirrors the board of the C6 entity. So its bylaws are going to simply say things like, it will have a president, it will have this leadership group, it will have this board of directors, and the people filling those positions are going to be exactly the same people who are filling the positions on the 501c6 board. Because we are changing the bylaws of the existing entity, the 501c3 entity, members have to vote for that. The bylaw provisions say that if you're changing the bylaws of that entity, you have to get the fellows to approve it. And I'll pause on that for just a second, because while we have voting in elections for both fellows as well as associates who have been associates for at least 5 years, bylaw changes are voted on just by the fellows. So this is a matter that's voted on only by the fellows, and they are making, as part of this, part of the board resolutions, or part of these resolutions, adoption of new bylaws for the 501c3. That is a technicality that is required. The resolutions that will be seen, and the fellows have received notice, formal notice of the proposed resolution. are going to approve sort of the entire plan. They're not going to want to approve something that takes away all the membership rights under the bylaws without knowing that those bylaws are now going to exist for the 501c3. So the resolutions are going to make it clear that they're voting to, number one, approve some amendments to our existing articles of incorporation to affect the name changes. They're going to adopt new bylaws for the 501c3 entity that make it a controlled affiliate, and they are approving the formation of this new 501c6 entity that will then adopt those existing bylaws, keeping in place everything that applies to their membership experience. So that's what's being presented in the form of a resolution that the members will vote on during the upcoming election cycle. That begins on August 19th and will go through the 3-week period during which members are also voting for board members and president-elect. The requirements for approving this is that we must receive a yes vote from 2/3 majority of the fellows who vote, and at a minimum from 10% of the fellowship. So given that we have approximately 18,000 fellows, we need positive votes, affirmative votes from at least 1,800 fellows, and then depending on how many votes there are, at least 2/3 of them have to vote in favor. We expect in the normal course of running our elections that we'll have well over 3,000 or 4,000 fellows who participate and vote in the elections. We'll be encouraging, of course, everyone to vote on the resolutions, and of course encouraging them to vote in favor of them.
Great, thanks Rich. And we're ready now to move into the Q&A period. And some questions have already come in, but of course you can send them throughout this part of the discussion. And I think we'll start with a question about the special interest sections. We have, of course, 20 sections, most of which have some funds that they have, in their operations. And given that, how will the current funds that the sections have be affected by this change if it's approved?
Pat, I'm assuming you're throwing that question my way. This is Rich again, and it won't be affected at all. Right now, as I said, the 501c3 entity has what we call donor designated, actually not donor designated, they have board designated funds that are dedicated to the section functions, while the sections will become essentially sections of the membership in the 501c6. The funds, the board designated funds will remain exactly the same. So they will become board designated funds of the 501c6 entity, and there will be no effect whatsoever in terms of either the budgets that are available to the sections for their use. There will be no change in the way we fund sections in the future through voluntary dues, section dues for people who want to enroll in additional sections or the ones continue their registration in the sections. And the sections will be entitled to continue spending those funds in exactly the same manner that they have in the past. And
for people that don't know, I have been the secretary-treasurer before I was president-elect, and I definitely agree with what Rich is saying. There should be no impact.
Great, thanks, Andy. Rich, we're going to go back to the explanation you were giving on what the thresholds are in terms of getting approval of this. Because we do have a question from someone saying that if 10% don't vote, does that mean that it passes automatically?
Well, no. If we don't have at least 1,800 positive votes in favor of these resolutions, then the measure would not pass. I guess perhaps the way to walk through this is a hypothetical. Let's assume for a moment that we have 2,000 fellows who vote for or against the resolution. In that particular case, we still have to get 1,800 who vote yes, who vote in favor. And that's going to be considerably more than 2/3 majority. So because the 1,800 the 10% of the fellows, is an absolute minimum. Anything less than that, it does not pass. If we had 3,000 fellows who vote, then, of course, we need more than 1,800 in order to get a 2/3 majority. In that case, we need at least 2,000 favorable votes. So those two hypotheticals of 2,000 voters, 3,000 voters, hopefully will make it clear that, you know, the 1,800 is a minimum. Any votes in excess of 1,800, we have to get at least 2/3 to be in favor.
Thanks. Part of the rationale for the C6, Rich, is the promotion of the profession, that is, I think as you termed it, more appropriate under a C6. Is it that we can't do it under a C3, or it's just, can you explain why now makes sense in terms of relative to the promotion of the profession in the SOA?
Yeah, I mean, you know, it is not that we cannot engage in that kind of activity under our current organization. As we mentioned, we've been operating as a 501c3 for, you know, nearly 70 years, and we've never had a question from the IRS as to the appropriateness of, you know, the revenues that we receive or the expenditures and how we are expending the information. We file a Form 990 tax return. It's an informational type of return every year, and it describes the activities that we're engaged in. And as I said, we've never come under question in terms of you know, the activities we've been engaged in. But this is not a bright line. It's not a situation in which you can sit there and say, this is an activity that can only be done in a 501c3. This is an activity that can only be done in a 501c6, and it's got to be so bright that you can't spend more than $1, you know, doing that activity in a 501c3, or you lose your exemption. It's not that clear. So, as I mentioned earlier on, there are many, many professional associations and societies, scientific, medical, and other societies that are operating like we have as 501c3s. There's no question that all of those organizations, to some extent, are promoting the interest of the profession. However, given that the IRS has a tax-exempt classification specifically for industry, trade, and professional groups that are dedicated to those kinds of activities, then it just simply becomes a matter of that the more we are engaged in promotional activities, the more we are engaged in advocating on behalf of the profession and our members, the more appropriate it is to be in the right classification. So that's really, you know, why we think this is a good time as we continue our evolution to be adopting a structure that unquestionably allows us to perform both types of activities that the IRS considers tax exempt.
So say that the proposal does not pass and we remain a C3. Is that going to affect the amount of promotional activity that we engage in?
I would say potentially yes. I think that, you know, as I said, you know, the IRS, to the extent that they ever had reason to question, they would probably be looking at expenditures of an organization. They're going to look at where your revenues are coming from and to see that those are revenues that are driven by activities that are appropriately treated as tax exempt for that type of an organization. They're also going to look at the expense side, and if an organization is engaged to a very material degree and in what they might consider an inappropriately extensive degree in activities that are not appropriate for a particular tax-exempt classification, then they could question it. We're nowhere near, I think, in a position where we are worried about that today. However, it's just prudent, as we look long-term, to be adopting and having a structure that is unquestionably appropriate for all of the activities in which we're engaged.
Great, thanks. Andy, as the board has considered this, has it been discussing some activities that it would like to engage in that it does not now, but that it potentially could under a C6 as opposed to the current C3 structure?
No, Pat, I think that the board has not really considered changing the activities at all. Look, I could imagine a future where we might want to do more lobbying, as we come under threat from other professions, the rise of predictive analytics and data analysts, perhaps. But at this point, I don't expect any difference in the current activities of the board, and we really haven't discussed anything beyond that.
Well, Andy, I'll jump in and add one little nuance to that. One thing, when you mentioned predictive analytics, it reminds me that one of the things that we've introduced in the past year or two is the Predictive Analytics Certificate Program, where people, as part of a professional development, can go in and develop an additional competency and expertise in predictive analytics. And we've designed a program under which they participate through a course of self-study. They complete an assessment, and at the end they might receive a certificate of completion regarding that predictive analytics study. A certificate program like that, those can be done under both 501c3s and 501c6s. They are most frequently done under a C6 organization. And the IRS considers those most appropriate for a 501c6 because the value of the certificate is really a value that's being provided to the individual who is participating and receiving that certificate. It's an activity that we've created that allows our members to enhance kind of their professional standing through that certification. And for that reason, it's a 501c6 type of activity most frequently. And so that's a fairly recent, that's a good example of a fairly recent evolution of things that we do and things that we offer that say, that kind of tell us more appropriately to do that in a C6 than a C3.
And Rich, I would say right now we're really not pushing the envelope because those predictive analytics certificates are kind of available through examination to our members, existing members, essentially FSAs that may want to retool and take their career in a different direction. But we've muddied the waters significantly if we opened up those certificates to non-members, public at large, being able to take that and we charge a fee for it.
Yep. Good point. Good point.
Rich, I do want to go back to the issue of lobbying. Is it anticipated that the SOA will engage in lobbying of regulators or elected representatives or others as part of its activities under the C6?
Well, the first thing I'll say about that point, Pat, is that lobbying is an activity that even a 501c3 can do. They are expected to do only a limited amount of lobbying. And most of the lobbying that they do is very, very constrained, both in terms of sort of percentages of their income, et cetera, percentage of their budget. But 501c3s can engage in some lobbying, and we do in small ways. As a 501c6, there would be less of a constraint. It is expected that 501c6 organizations tend to do more lobbying, and therefore they have more leeway to do so. But that is not a reason we're making this change. It's not because we feel that we have a compelling need to begin doing more lobbying or to add more lobbying than we've done in the past. There's no intention to become a lobbying organization. So while the 501c6 allows it to a greater extent, that doesn't mean we're going to do it, and there's no expectation that we will.
Okay, thanks. Rich, can you talk a little bit about the operations of the SOA? There's some interest in, where the staff allocations go. Are there separate budgets and separate accounting activities that need to happen for the two entities?
yes, absolutely. If we're going to conduct the business through the two entities, we absolutely will have, accounting systems that appropriately record revenues and expenses to the appropriate organization. So, and we had a slide earlier that showed a little bit in terms of what activities would be done under the C6 and one under the C3. So, for the most part, when we look at expenditures that are related to research activities, those expenditures will all be recorded under the 501c3's budget, the new Society of Actuaries Research Institute. There may be some, but probably little revenue in the 501c3. Most of the revenue producing activities, qualifying education, exams, etc., the professional development activities, the membership dues, and those activities are going to be under the 501c6. So most revenues are going to be driven through the 501c6. In terms of then, how do you allocate the expenses? We're going to have still the same staff, one staff. Their employment will remain in the 501c3 entity, simply because we don't want to have to change things like benefit plans, et cetera, that are in existence today for everyone as employees of that entity. But when staff are engaged in conducting activities relating to, exams and professional development meetings, et cetera, the payroll cost will be allocated from the employing entity to the entity for which the services are being provided. And this, again, this is not an uncommon thing. Many professional associations have adopted this sort of dual structure and operate in the same fashion. So we will be able to adopt through our budgeting, through our governance, and through our operations and systems the appropriate allocations of revenues and expenses between the two entities as appropriate.
Thanks. Andy, the point was made earlier that it was during the combination discussions with the Casualty Actuarial Society last year that just through some discussions it became clear that maybe this sort of a structure that's being proposed would be appropriate. Does that signal in some way the board's intent to be either looking at a merger with another actuarial association or other sort of combinations with some other organizations in the future?
We're really not looking at anything like that. The discussions with the CAS occurred over a several-year period. I think we've been working on it for maybe 18 months or 24 months before the discussions ended. There's no other discussions that I'm aware of at this point with any other organization, and I think that discussions with the CAS are dormant, at least for now. One thing that had not been clear to me, and Rich, maybe you can help me address this, is when we were looking at a combination and we realized we have these two different tax structures, it's not like one organization becomes a subsidiary of the other organization. There's still two different organizations, right? And I think that's the case with what we're proposing here as well. It's not like one owns the other. It's they both exist. They both have budgets and are funded. The commonality is they share the board of directors. And so had we gone ahead and combined with CAS, we would have needed the two organizations anyway. It wasn't like we could dissolve one of them. So, in looking at that and understanding it, it became apparent that there's advantage to the organization to have both organizations. It clarifies it.
Yeah, I don't think there's too much I would add to that. There is a little bit of a nuance involved when you talk about combining two organizations with these two different types of tax status. For reasons that I really won't try to go into, you can merge a C6 into a C3, but you cannot merge a C3 into a C6. So, the combination discussions highlighted the importance of maintaining both structures, and for reasons related to that, it's part of the reason that while we're creating a new 501c6 entity, and it's going to have the Society of Actuary names, and it is going to be the membership body that everybody knows and is familiar with, we can't just eliminate the 501c3 completely and merge it into the C6 for the same reasons that we couldn't have done that in a combination with the CAS. So this idea of maintaining both entities in parallel under a common governance for the foreseeable future is a natural outcome, and as I said, a common approach that other organizations have taken as well.
Rich, will the actuarial foundation be affected in any way if the proposal is adopted?
No, it won't, Pat, and the reason for that is that the actuarial foundation is entirely independent. It is not owned by or controlled by the SOA. It has its own board of directors, and it operates entirely independently from the SOA today. So it is not a subsidiary. It's not a controlled affiliate of the SOA. Its status as an independent foundation that is supported by not only SOA members but CAS members and others will not be changed at all.
Rich, you talked about how the other actuarial associations in the United States are C6 organizations and why that makes sense. Do we know historically why the SOA has been a C3 since 1952, I think you said?
Well, in doing our due diligence relating to combination talks last year or so, we actually were trying to find early records of the IRS determination letters that had been applied for and received. And we learned something that we didn't know before, at least nobody currently here, that when the SOA was first incorporated, that was in 1948-49. And it originally was incorporated and exempt under an IRS code provision that was the precursor for 501c6. So its original tax-exempt status would have been a 501c6. But in 1952, there was a request made to the IRS to reclassify the SOA from that status to the 501c3. Unfortunately, we couldn't find much. Those were pretty old records. We couldn't find anything that really explained why they made the decision to seek C3 status in 1952. But they did, and we've been a 501c3 ever since, and it's served us perfectly well. I keep emphasizing that. This isn't something that's wrong for us to be a 501c3. But if we were incorporating today, I would be recommending a 501c6. And given, as I said, the kind of the direction in the future, we think that that's appropriate to have that classification for what we do.
Great, thank you. That completes the questions that we've gotten in. Andy, is there anything you wanted to say as we reach our conclusion?
Yeah. I would just ask, please. We're putting forth the recommendation. We really don't see any downside and reason not to vote for this. We do have the minimum number of votes that we need, so I would encourage everybody on the line to vote in favor of the proposal, and to encourage others in their organizations to also vote and vote in favor of the proposal. We think this is a good thing for the SOA.
Great, thank you so much. Thanks to Andy, thanks to Rich, thanks for all of the people who joined us on the webinar today. You can find more information about the proposal at SOA.org. And if you have any questions, you can send them to membercoms at SOA.org. We are updating the frequently asked questions area as as much as we need to. And as Andy said, we do encourage you to vote when the election opens on August 19th. And with that, thank you very much, and I hope everyone has a great day.
Thank you. With that, we will conclude today's webcast. To register for any of our upcoming webcasts or meetings or to purchase recordings of previous webcasts, please visit www.soa.org today. Thank you for your participation in today's webcast. We hope to see you here again soon. Today's program is copyright 2019 by the Society of Actuaries with all rights reserved. This concludes today's program. Thank you. You may now disconnect.